All right, good morning, everybody, or good afternoon. How are we all doing today? Good. Greetings. All right, excellent. Well, bearish isn't looking so hot today, but yes, I'm the eternal Euro bear. All right, guys, so we're going to talk about, per usual, sounds good. Per usual, participation is much appreciated. It makes everything cruise along much better and a better learning experience. So any questions, fire away. Happy to pick up anything. I probably got 25 minutes worth of presentation today, and then it's open to the floor. We can talk about pretty much anything you want. I figured that we might want to look at a couple of charts today with a few little things going on. So maybe build a few trade plans using the intel that is provided today. Okay. So thanks for coming along. So today's webinar is called Overlap is King. All right. And one, I needed something to talk about, but two, I think it's a decently important subject. In that, the interesting thing, why is that, Boyke? The interesting thing about trading is that a lot of it's just a false sense of security, isn't it? And I'm okay with that. I'm okay, it's there's a lot of folks out there that like to live in a bubble. I'm not one of those. But I like to live in a bubble when it comes to Forex. Even if, because nothing is certain. However, if I'm going to put money on something, I would like to at least be able to stack the odds in my favor as opposed to have one piece of information telling me something. All right? And a lot of times, I read a lot of reports. I read a lot of reports, but I mean, what currency is directional right now? Not very many. Anyway, we're having two conversations. But my point being here is simply, I read a lot of reports, and I see Morning Sanjay, and I see a lot of analysts that are divided. And sometimes they can be divided within the same report, right? Example, Euro looks bullish. However, we can also see a scenario where it's bearish, right? Or it's bullish on the 4-hour, but the daily looks short. Or the typical, if we get this, then that. All right? Which, I mean, there's merit to that, and what people are doing is giving you their thought processes, and then it's kind of up to you to work it out from there. All right? That's essentially what's going on. However, that doesn't really help us necessarily make money, does it? All right? So my point being is, even if you're wrong on the bias, it's nice to have multiple reasons to do something in one direction. All right? So we're going to look at some things in retrospect, and then we'll try and find some stuff in foresight to illustrate a point. Okay? So some of the things that I watch for, and we're going to make a little list here, and then we're going to build a case for every trade. All right, and this is the thing that, I think the novice has a tough time with, just from a psych standpoint, is the patience to stack the odds in your favor. All right, I think it's easy to get impulsive and take trades that are outside that comfort zone, or you haven't done your due diligence on the analysis. All right? I think we're all guilty of it. Oh my goodness, it's going without me. I want to trade here. Okay, it's doing X. I'm going to do Y. And inevitably, one loses on the trades, or sometimes you'll win, but inevitably one loses more on the impulsive trades than the ones that you've planned strategically. And even if you've planned them strategically and you lose, somehow one feels better about that, or at least I do. All right, so let's talk about some of the things that we can layer in our analysis that give us this confidence to trade, or said differently, give us this false sense of security. Okay? So, number one for me is I like to try and trade in the direction of what is fundamentally, I'm going to put your fundamental, it's not easy writing with a rodent. All right? What is fundamentally sound? Okay? And I'm going to put you in parentheses. I'm going to put you yield differential principally. Okay? Mental. Yes. Exactly. More mental than fundamental. Right. So, point being is that ideally, I would like to be trading long on the currencies that have higher interest rates, and short on the ones that are dropping rates or in a spiraling. I think there are. I think there's underlying fundamentals that make sense. I think the problem is just. Thank you, Dave. Thank you. I think the issue is simply. I think the issue is where are we in the fundamental cycle? That's different. That's difficult. You know, and can I spend a minute breaking that down, because I think it's important. Because here is, if there was one lesson taught to me fundamentally in currency trading, it was as follows. All right. Check it out. If you have all right, let's talk about the US. We'll talk about the pound. All right, and we'll talk about the euro and the Aussie. All right? Okay. And this is, I'm doing this as generically and sort of basically as possible, but it's probably all you need to run with, to be honest with you. Okay? The number one fundamental rule with trading is yield. Okay? Money will flow typically to the currency that's going to give you the highest yield or the highest expectation of yield. All right? Because although the Aussie is 2% rates and the dollar is 0, all right, or 2 versus 1, it might not be a lot for us, but you leverage that up a couple billion, it starts to be real money. All right? Cash flow is going to want to migrate to high yield. It's just the way it is. All right, principally speaking. Okay. Now, although we have the Chinese economy growing rapidly, you know, Asia's still growing at 6%. This is my thing too about Asia is that, you know, oh, China's not the growth story it was. Yes, you're right. It's come down because of just and I'm going to explain that. And I'm going to explain exactly that, Ruben. Because it's relative to where it was and the cycle that it's in. Because it's what happens in reality in the moment of what you're looking at is one cycle behind what's being traded. Okay? So although the US economy is falling out of favor, it is still the benchmark for what goes on in the world. Meaning this. If the US gets a cold, the rest of the world will get flu. All right? It is still the knock-on it is still the knock-on, it is still the benchmark currency, the benchmark economy for what other economies react to. Okay? Right. All right, meaning this. If the economy is hot, all right, if the economy is hot and inflation's rising, generally a central bank will want to raise interest rates, right? Want to raise rates to cool down the economy. It's Ecos 101, right? And if the economy is cold, inflation's down, employment's dropping, generally they'll want to cut interest rates so that it increases lending, blah, 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 blah. All right? Okay. And in the process, the value of the currency is depreciated, etc. Okay. And in today's day and age, we have QE thrown in the mix there too, which is part of this component. Right. Now, the interesting thing about the world is this. Okay? The US, the Fed, they are concerned with a dual mandate. Okay? Price control and growth. Okay? Price control and growth. All right? So, dual mandate for these guys. Dual mandate here. Single mandate here. Dual here. For the most. Okay? So this is an interesting proposition all in itself, isn't it? Because as long as these guys are hitting an inflation target, that's what determines the interest rates. Right? Meaning this. What is a mandate? Meaning this. The Fed's job, all right, the Fed's, why they went to Jekyll Island and sat around the table to get out this Fed thing, was principally to control two principal jobs. All right? How to control price inflation in the market, as well as economic growth. Okay, and it's the same for Bank of England. However, the European Central Bank, they don't have this double job. Their single job is price inflation, which that's starting to bleed into a dual mandate now. It is. But principally, they only care about inflation. Okay? And that's why, even though the European numbers that come out every day, oh, we're missing GDP, we're missing, I've sat for 2 weeks and watched the eco numbers come out for Europe, and they've missed. Germany's been okay, but everybody's just missed, GDP, and all of it. All right? Why hasn't it clobbered the euro? 2 reasons. One, we're still printing money like a drunk sailor here in the United States. Okay? And then 2 is that the Europeans, in theory, they're going to run themselves into a massive recession, in my opinion. But relative to what the United States is responsible for, morning, Martin, right? Relative to what the United States is responsible for, that's okay for them to see. That's okay for them to see these sort of deflationary numbers as long as they don't see tremendous inflation. All right? And this is why the euro has actually got this relatively bullish posture relative to these other currencies, because their mandate is different. However, their fundamentals are weaker. Okay, this is confusing now, but I'm going to get to my point in a minute. All right, now, if the United States economy, right, which typically lead the rest, starts to cool off a little bit, okay, and the Fed comes out and starts a cutting cycle, all right, the dollar is not necessarily going to weaken in this phase. All right, and I'll explain further here in a minute. All right, and the pound because it's lagging a little bit, maybe 3 to 5, 6 months, all right, their interest rates may be flat. Okay? And the Europeans might be sort of just plateauing off from raising rates. Okay? And the Australians might be in a sort of an inflationary cycle. No, Greg, to answer your question, no. I haven't, I've been divorced from that company for a while. All right. So interest rates down here in the States, flat for the Bank of England, kind of marginally up, sort of plateauing out for the euro, and rising for the Aussies. Okay, and like I said, I'm doing this in a generic fashion. Okay, then the economy improves marginally here in the States, and interest rates flatten out. The pound starts to drop. Europeans are flat. All right, and the Aussies are slowing. Okay, and then say the economy starts to improve here in the States, start to raise rates, flatten here, cut here, and flat here. All right? This is the very basic, very generic, take quantitative easing out of the mix, economic cycle of the world as we know it. The US leads it, everybody else follows, and the interest rate cycle continues. Okay, now, one would expect, can one hedge if you have two accounts, not on the same account? I mean, it just depends where you live, right? All right, so one would expect that in this phase, the dollar is dropping. And in this phase, the dollar is sort of sideways, and this phase is rising. This is not the case. Okay? This is not the case. In reality, I don't hedge typically. I just pick a bias and go with it. This is not the case, guys. All right? Typically, if interest rates are dropping, okay, if interest rates are dropping, the currency has already dropped. The currency has already depreciated. Does this make sense? So, really what's happening is the dollar would be rising here, flat here, all right, and getting ready to roll, I'm sorry, yeah. Oopsie. Okay. Potentially rising in the neutral phase. What do I trade right now? Euro dollar, euro yen, euro Aussie, euro pound, pound dollar. The typical candidates. Aussie Kiwi. Alright? What I'm getting at here, guys, is the following. Okay? Is that although the interest rate cycles might be in one phase, the trading has happened in front of that phase. Does this make sense? So why is the Aussie been crashing despite having a higher yield? Well, it's been in this phase and this phase. Meantime, the US has been in this phase. Make sense? So what's happened is that the dollar has already cut. They've already cut everything they have to cut. So although the Aussie has higher yields, it went into a cutting phase. Therefore, the anticipation and the early execution of that new phase is when the currency is priced. Right? This is why the tapering thing is such a big deal. Because tapering is the anticipation of rates and yield going the other way. So people trying to anticipate when the tapering and how it's going to happen is indicative of the anticipation of the yield of that currency. It's a change of phase. All right? Is everybody clear on this? So if you see, the dollar is, we're seeing interest rate high. We're seeing interest rate hikes here in the United States. Okay, chances are the dollar's already appreciated. I would say that there's no trend in the euro right now. Guys, ask your questions publicly. There's no, unless you're going to ask me personal stuff. Okay? Before we move on to other things, I want to make sure, we'll talk about the yen in a minute. I want to make sure that everybody's clear on this. So what sorts of things, so then the next question that leads into this is, what sorts of things help one anticipate a changing of phase? Because it's the changing of phase that is going to change the fundamental picture of that. Well, no. But, the charts are going to give you the heads up. But it's the anticipation of the new fundamental phase which is actually going to forge a major trend in the market. Okay. Okay, here's another one. China growing at, I don't think it has the Reuben. That's contestable point. Right? Anybody's got an opinion. Okay? Thank you, Dave. Alright? I think that, in my opinion, the employment market's been disappointing. QE was quantitative easing. It's proven throughout history it has no direct correlation with employment. And for the Fed to hedge, or for the Fed to attach an employment number to the end of QE is ridiculous in the first place. All right? And the United States calculates employment numbers different to everybody else. And I didn't mean to get into massive fundamental conversation there. But you got to remember in the States is that you only considered unemployed if you're seeking benefits. Probably 50-50, maybe 60 fundy, 40 tech, with the low volatility especially. All right? So in the States, unemployment might be dropping, but unemployment's actually in reality rising. Why? Because those people have been unemployed so long, they're no longer seeking benefits. Therefore, the statistics would dictate that unemployment's actually dropping. However, those people are now just out of benefits. Just marinate on that point for a minute. All right? It's not the most, Anyway, so 2155, yeah, all the same. All right. So getting back to the United States fate versus. So in my opinion, they've now fed this. The Fed have fed this sort of spoiled child. The child is now crying. There is no exit strategy. I guess this is what I'm saying. So the dollar has been in one continuous cycle. I think the pound is going to rise, but the Aussie is intriguing to me because, to me, the Aussie is going to go through two cycles while the US is still stuck in this one sort of linear cycle. So we've come down, and I think we're going to make a little turn up here in the same time that the dollar remains flat. And said differently, these guys start to do this. And I think that we're sort of somewhere in this phase here. And we're kind of somewhere up here in this phase. So long term, Euro Aussie dollar, this way. So then I start to look at things, based on that, then I start to look at stuff here like in this Aussie and go, okay, well, what's interesting? And then you start to take, so one has a fundamental bias, and then I start to look at things like this. Well, this is interesting. Right? Psych level. Now I start to plan for sort of something like this. Does this make sense? Now, why would one even think that? Yes, it's a technical level, but China's still growing at 6%, 6.5%. All right? These guys have resources. It makes sense to me. The domestic economy is growing. The dollar has no exit strategy whatsoever from this QE and low interest rate situation. It's likely, in my opinion, that the Aussie is going to heal itself up that much quicker. Does that mean that the Australian economy is necessarily stronger than the dollar, stronger than the US? No. It's just a phase. It's a change in phase, or it's the anticipation of this change in phase that's going to drive the currency forward. Does this make sense? Okay. So, number one thing that I watch for is fundies. Okay. Number two, just blank support and resistance. Meaning, you can look on the chart, look to the left, and you pretty much know where other people are going to be doing some stuff. Right? It's the two most, this is the formula for trading. And then, obviously the trading component itself. But as far as a strategy, you don't need to look a whole lot further than that. Okay. Number three. Now we sort of get the subsidiary of support and resistance. I happen to look at pivot points. Okay. Pivots. Weekly pivots. Daily pivots. I like pivot points. It's no coincidence that the euro turned today at 36.44, which is a weekly S2. It's also visual support, and it was resistance on the dollar index. And the psychological level of 36.50 for psych levels. The reason I mention these is the topic for this, is my mindset still boot camp? I mean, I'm not sure really what the question is, but I mean, I learned a lot from FX Bootcamp, yes. I'm no longer a coach there. I learned a lot from FX Bootcamp and Chris and Wayne. But I've always been an individual. I've always had my own sort of ideas on things. And I think that's important anyway, to have your own ideas. Because it's you the only person responsible for your level of confidence. Guys, I'm quite happy to do this on a chart. Right. Let's look at a chart now. Right. The topic of today's conversation is overlap as king, and so far I've just talked about fundamentals. All right. I like to stack 2 or 3 things in my favor to determine a price point by which I want to sell or buy. All right. So let's do that. Okay. So let's take all the stuff off the charts. All right. And let's pick currency. The fundies are important. I think that and I don't think it's particularly difficult. It's one of the more fun things in trading. Now, where we are right now, like the market's very sensitive to somebody opening their mouth, a number coming on hot or cold. I would argue that there's no overriding fundamental trend in the market right now, particularly for the euro dollar, particularly for the yen. You know, the Aussie is still marginally in a downtrend, but I think that that's going to begin to change shortly. All right. Yeah, you should trade what you see. Yep. I think the question is sometimes one doesn't know what one sees. And that's why, I like to have a couple of things underlying in my brain that, and principally fundamentally. So I look at the market. You guys know I'm the eternal euro bear. I look at it and I say to myself, I see calamity coming. All this austerity is going to cook that economy. But anyway. All right. So let's pick a currency. All right. Let's talk about the Aussies on in front of us. Let's talk about that, shall we? Yeah. Okay, we'll do it like this. All right. Right, let's have a little vote, yeah? In your opinion, what would we say is the weekly trend here? From a price action standpoint, it's making lower lows and lower highs. Okay, so I would say that it is, 10 being the quickest downtrend in the world, 1 being the slowest downtrend in the world. What did you guys give this? That's what I'm doing, Boyke. I'm going to build the case. Yeah, I'd go like 46. Okay, so it's not a screamer by any stretch, but it's a concerted downtrend. Right now, has it hit a? Is it oversold? Is there such a thing as oversold in a downtrend? Oversubscribed in a downtrend? Confluences, overlap, it's all the same stuff. Possibly not. Okay. Where would be the major level we look for? 80 cents. Yeah, I think it's probably a little bit before that. 80 cents looks like a good one. We can probably draw something like this, although I think it's broken. Yes, it has been. We'll keep that in mind. All right, now, one thing that's interesting to me here is the weekly stochastic are still pointed to the upside. So this is actually telling me that when it's in the trade zone like that, it's sort of the major. Think of this as the Amazon River and everything else is a tributary. This is the weekly chart. Okay, so this is the major flow of things at the moment. So really what this is saying is probably another 3 weeks of upside pressure on this. So that immediately starts to make me think that, something more like this vicinity becomes reasonable. All right. So, because of just this sort of price cycle that's going on now. Okay, then we can start to look at some other little places. So 94 is the psych level. It's previous support going back months and months and months. It can turn where it is, but in my opinion, when it's up in the trade zone like that, it is likely more to bend than turn. Okay, so far we have 94 as a key level on this thing. All right, I would also take note that this stuff stopped prior to 94. Do you notice that? So people started to trade prior to. It's worth noting. It's putting a line there. Okay? I'm not the only one that sees that. Other people do too. All right? Now let's switch to the daily chart. So this daily stochastic is still down, in my opinion. It's choppy. It's still sort of down here. So weekly up, daily, weekly, daily is down, but not with a lot of conviction down. All right? So then we look at something like this. Would you agree that sort of this 88.5 level looks interesting? There's a lot of stuff there, right? This is still saying down. Okay? And then we worked out that we've got a bunch of people that were willing to sell it up around sort of 92.70. And we've got another sort of reasonable level of resistance here at 91.68. Well, 91.68 is interesting because 91.42 is a weekly R2. Well, it's already Thursday, so that's not likely to play a role. All right? But let's look at something else. E5 happens to be a weekly S2 pivot point. It happens to be this support zone. We have the weekly stochastic pointed to the upside. How would you guys feel about maybe putting in a trade through here, looking for a first sort of target of this 91.40 zone, 91.5, one, because it's the psych level. It's this previous resistance. It is the top Bollinger Band on the daily chart. All right. How would you guys feel about putting in a trade like this? Out of a quality of 5 stars, how would we feel about that? I would feel okay about it. I'd probably give it 3.5, maybe 4 stars. Why? The odds are in, you stack the odds, but we just discussed that the trend is probably down. So it's principally a counter trend trade. Okay. Now, I'm good with it, and I'm going to look to take this trade next week or tomorrow if time allows. Okay. Now, what about something like this? Right back to where it came from. Because even if this trend is slowing down, that's neutral price action, off resistance, and the Australians are still cutting rates. So if I'm going to do any trading on this, it's going to be here, and it's going to be there. Why is that? Okay, well, here we have one. The fundamental trend is still down. By that time, the weekly stochastic would have got to the top of the cycle and, potentially try to roll over. I think that this early 93 level will be sort of the first little wave with a fake out. Okay, number 2, it's resistance. We looked at that on the weekly chart and we discussed that this level is important. You can see that people did stuff here. It's an important range. Okay, we've got to look at the pivots. We've got to look at the pivot. We don't know that. We've got to look at them for next month, which is coming up in 2 days. Number 4, you got the psych level of 93 and 94. Okay. I think it's going to be more just China. It's going to be more China basing out in terms of the industrial numbers. China's still growing at 6.5%, but what's happened is that people have been disappointed because the level of expectation has been higher. So they'll drop the level of expectation, they'll stop disappointing, and then we'll become relatively strong. All right. But what I wanted to point out, you guys, is when you do your planning, I don't care if you're using Elliott Wave. I don't care if you're using pure fundamentals. I don't care if you're using moving averages. We didn't even talk about those today. Be careful overlapping 14 different oscillators, because you're not really getting overlap. You're not really getting confluence. You're just getting the same information. You're getting basically the same information through email, text message, and phone call. But they're all telling you the same thing. Okay? So oscillator overlap doesn't count as confluence overlap. Make sense? It takes time. The biggest thing with fundamentals is the time horizon that you're dealing with. When are you actually seeing the fundamental move within the context of the fundamentals? That comes with experience, and nobody can give that to you. That you just have to be around it long enough to understand that, So it's, if I can, come up with a little analogy, it's a little bit like learning to fly. When you're initially learning to fly, right, and we didn't even talk about fibs. You're absolutely right. Yeah, I mean, fibs are a huge thing. We could absolutely do sort of something like that and say, right, this is right within the context of the fib zone, etc. Absolutely. Yep. I guess I use fibs so visually these days that I don't necessarily draw them on the chart anymore, but absolutely. Yeah. And guys, I literally do this stuff. I literally will put a big red splodge on the chart like that, so that I know, when we're up here, like I'm principally looking for shorts. Right. Okay, and I'll put a green splodge here on my chart so that I know, that this is a very good place for it to want to at least do this. Okay? So when you do your planning, build the case for yourself. Does this make sense? Right. So the market, I was giving you an analogy on the fundamental thing. When you're learning to fly, all right, when you're learning to fly and you're coming in for your landing and you've got 7 hours under your belt, everything happens very, very quickly. Right? You got flaps and you got this and you got that. And you got all of it going on. When you've done it at 100 hours, you're doing all the same stuff, but it's all slowed down because it's all easily at your disposal. Right? But nobody can give you that experience. You just have to be there for that experience. So what will happen with the fundamentals is, one, you'll be able to start following them further, and this takes 2 to 3 years. And you would have lived through a couple of those massive cycles, and you'll start to get a feel for how long this takes. 88.50 88.50 on the short. Oh, to 88.50. I don't particularly care for the hourly stochastic. I think a short's better served somewhere close to 89, or rather, 90 to 90.10, frankly. I'm anticipating 89.50 holding as support now. I don't trade other people's money with currency, but I'm involved with a private equity fund that does investment into higher end wineries here in the Napa Valley and Pacific Coast here in the United States. So I'm busy with that, which is, yes. Yep. Yeah. Guys, if you're interested with any of this, here's my email address. Happy to answer any questions you have. I do not actually. That's the ironic thing. But thank you for attending, guys. I know we got a little bit sidetracked with the fundamental discussion. Yeah, at Forex David on the Twitter. That's also a really good way to get a hold of me. Thank you, Dave. All right. If you have any other questions, yeah, I think I didn't cover it in the detail I wanted, Boyke, but we can continue it in March. Okay. Thanks, guys, and nice to see everybody again. And we'll talk to you in 30 days. Cheers.